and then monetize when they are revenue accretive, not when they are in the capex mode. Once it is ready for OPEX solution, we are there with them. Then the investor is ready to be part of us at 10-12% also. So that delta of 5% I want my investors to earn along with us as a financial reward, which we have done. Like we created assets in transmission, renewable power in last 10-15 years worth about 4,000 CR. And we made a capital gain of no less than, I will say, about 750 CR in parting those assets, all at a gain, sir. If equity deployed was in those assets was almost about, say, 1,500 CR, we received 1.5x on those assets. So same strategy we want to deploy here. You make EPC margin while deploying the asset, and after that asset is revenue accretive, bring a investor and part of with it. So that this 5,000 CR remains a criticality, a critical investment all the time with the company, where going forward, we are able to sustain even any odd happening in the market. Many infra companies in last 10 years failed because a lot of counterparty, commitments were not kept by them. The biggest bonds means a company called ILFS, so used and still so big a failure in the market only because of the counterparty risk. So it is always a good idea that when you build these kind of capex, you must have another amount in the pocket to sustain it for a year or more, even if anything goes wrong. So all these considerations are behind us, I would say, while building on it, a financial model like this, sir.
Gupta ji, my last question is, while financially we are prepared to really capture this opportunity, and I trust you, can you elaborate a little bit more on the manpower requirement? What kind of people will require to execute and make this company go to 10,000 crores in the next 4 or 5 years? And what are the real biggest challenges which could come in our way to achieve this objective?
Sir, I will only say that, sir, the challenge is always learning and remain ahead of learning as a requirement of the very solution. And that is why we always remained in a power vertical, not as an element, but as a 360-degree presence in this sector. We understand this sector as a very Electricity Act, very regulatory nuance, very nuance of the programs of the Government of India and its achievements, and as well as our participation in this sector, that most large players in this sector today say that Techno can do what they are capable of doing. And also we are serving them additionally, I will say. But where we are differentiating over others is by going beyond power into power guzzling solutions like data. I believe society will depend on two things going forward, sir. One is a data and another is energy. Like if you read the statement of Tesla's chairman, he has only said, I can create as many data centers catering AI solutions as possible, but I don't believe energy will be available. Pipeline to energy will be available. So this is where Techno wins over many others, that I can link solutions as well as provide energy to them, both. And India is globally competitive today in energy. The energy, if you look on Singapore, you look on Europe, you look on America, nowhere this energy today is less than 12 to 20 cents. Whereas in India, we can provide at 8 cents, even today, in these applications. So gradually, world will realize the importance of location as India, trust more of our Indian capabilities, which all have served abroad successfully, but not in India, on Indian soil. That is where we want to blend with them, sir. And all this knowledge has to be part of Techno. I will like Ankit to elaborate on this. We have already done many recruitments. Ankit will elaborate that. Ankit, are you there?
Yes, I'm here.
Yeah, can you elaborate how you are going about recruitment and expanding Delhi as a base?
Yeah, we've over the last 6 months, we've made a target to start recruiting leadership team at for different roles and responsibilities, and addressing it more on each vertical basis. So today we largely define Techno into 4 verticals. One being obviously the T&D, FGD, smart meter, and data centers. And we've come to realize that each vertical has to have its own leadership team and each have to be dealt as a business unit in itself, an SBU per se. And that's how those recruitments have already started. So as we speak, we have already taken on board Mr. James Strout from US, who was the founder of Vantage Data Center, Foresight, both the companies today being close to $15 billion each. He was the founder who exited to Silver Lakes Capital. He was also the founder of the largest DC data center operator in the world today, which is Digital Realty. He was a founding member of that group. So he's onboarded now on the board to guide us developing largely the marketing, sales, and operations team. And we started engaging with those teams in US. So we are trying to create a team in US itself to work closely with these hyperscalers like Amazon, Google, and others, where the design decisions take place. Execution may happen through APAC, India, but the larger design decisions happen over there, and we want to start influencing those. Similarly, we are starting to create a business unit. We are exploring to engage a business unit head for data centers, along with a very, very large sales team, for the reason that changed the strategy, and going forward, we've engaged with, we are trying to bring a good finance and accounts team also for the entire group. So slowly,
Mr. Mishra, you can highlight on the renewable side.
Yeah, and on the renewable, we've also engaged with Mr. Shailesh Mishra, who was Director Technical in Solar Energy Corporation of India. He's full-time with us now. And his guidance and his visions on what renewable energy or power sector will look for tomorrow, or look like tomorrow, we have already started working on that. So yes, we are becoming a little more conscious on developing top management, and leadership roles are being defined, and we are aggressively looking for this year especially. We'll be concentrating on developing those things. Especially for IT, we have picked up someone from we picked up someone from a PSU who was heading who was the chief technology officer over there. We thought that PSU engagement would be the best, because given Techno's relationship with customers also around PSUs and CPSUs, so that culture fit is good. We picked up someone from ENY again for heading our finance, accounts, and strategic planning and other things, and audit. So she will also be joining very soon. So
thank you so much. Thank you so much, Gupta ji. Thank you so much, Ankit. Really, really appreciate giving you an opportunity. Wishing you all the very best. I wish that you create the most respected and the most valuable company out of this sector, considering the opportunity which is there in front of us over the next 4 or 5 years. All the best. Thank you very much.
Thank you. Thank you so much.
Thank you. The next question is from the line of Venkat Subramaniam from Organic Capital. Please go ahead.
Gupta ji, none of my questions have been answered. If you recall, over the last couple of calls, I've always been asking about, how we are going to empower ourselves with on the people side. So some of Ankit's answers are pretty useful. From whatever I can see, we have now clearly, transcended to be a technology provider than just be, a contractual obligation provider. Given this growth just now, are we getting paid sufficiently? In some of the segments, we probably should get much better margins. So are you seeing those opportunities, and if you do, in which areas are they?
Absolutely, Venkat. That's why I use the word, this is a paradigm shift for Techno now. That we are no more rubbing shoulders with the conventional players, limited to conventional solutions in all low end or mid end. All this sector is now having opportunities as I call it mediocracy to technocracy or high-end complex solutions, and definitely they have rewards in it. And we are definitely built for it. We definitely look forward to enhancing our rewards to more than 15% going forward over next 2-3 years. And even what Madhuji had asked, I will say the IRR looked upon by us will not be less than 18 to 20% on all these investments put together.
That's lovely to hear. We've always known you to be, ultra conservative, and I've never seen you this excited. We can clearly see very, very exciting times coming ahead. Best wishes, Guptaji. Looking forward.
Sir, for 8 years, this sector has only suffered. What could we have done better, Anybody going aggressively in those times would have burnt himself, I can assure you. But today is the time to benefit now. We have cash, we have strong balance sheet, we have good credentials, and we have good knowledge to encash going forward opportunities. I can assure you, Venkat, tomorrow is the day for us.
We can see it there. All the best.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi. Hi, sir. Congratulations on a good set of numbers, sir. So a few questions from my side. First is, what is the current order book and L1 position? And can you break up the order book into generation, transmission, distribution, data center?
Yeah, no issue, sir. We have total order book of about 9,200 CR as of now, unexecuted, and we are almost 1,050 CR in L1 position as of now. Not March end, as of now, I will like to use. Out of this, I will say that about 5,000 is in transmission, which includes about TBCB transmission assets of power grid about 3,000 CR, and TBCB won by private players and Techno is about 1,500 CR put together. FGD is about 1,300 CR with us. That is a power plant generation side. In distribution, without smart meter, I will say that we have business worth about 350 CR now. Not 350, about 400 CR you can say, including Tripura. And then smart meter, we have worth about 3,500 CR already with us. And data center, of course. We are not able to place a value on this concept of edge data center. It can be total game changer for the company going forward. But I can say minimum over next 4 years, it will be at least 1,000 CR, even if I take 10 CR per location in under the stations.
Sir, is it right to say that we have won around 100 edge data center, and you are saying that 10 crore per data center, right? That's how you're arriving at it.
Yeah, absolutely. We have partnership with RailTel on a concession of 20-year basis, and we'll be deploying in all prominent places the data centers for that.
Understood, sir. My second question is the order inflow. So you gave a target of 5,000 crore. And we look at all the underlying businesses, I think, be it FGD, be it data center, be it smart meter, or be it transmission. I think the opportunity size will only ramp up compared to last year, isn't it? Especially given the fact that Power Grid has done at least C2 and REC and TSC have done 47,000 crore worth of bidding last year.
Absolutely right, sir. It is always more gratifying or satisfying. You say 5,000, achieve 8,000, rather than other way around, sir. So, we will like to pick and choose going forward now. That is our aim. Risk reward must be evaluated very properly, which we have done, and we should be able to do a contract in time. So all these factors we'll keep in mind, sir. But you have a point. The opportunities are a lot bigger than what a number I have given you. Hopefully, I will beat my own number, sir, and I am here to do that.
My last question, sir. Do you intend to keep bidding for TBCB assets on our own balance sheet, or is that the two which you want is enough for now?
Can you repeat your question, sir?
Do you intend to keep bidding for new TBCB assets on our own balance sheet?
Yeah, we are doing it, sir. Absolutely.
You want to, but you want to do more given that TBC pipeline is humongous this year, right?
Sir, but we don't want to aim at each concession capex of more than 500, 600 CR. On an average, we want to be in a low capex solutions so that the IRR available to us is larger than what is available in competition to giants like Power Grid and Adani or others. So we want to be in a safe haven.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. The next question is from the line of Abhishek from Naredi Investments. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, my first question, what is CapEx plan for entire company and especially for smart meter and transmission segment for next 2 years?
Sir, already I have stated it will be in total you can take almost about 5,000 CR for 2 years, 2,500 CR each year.
Okay, and second question regarding smart meter, it is perfectly cash consuming business because a smart meter delivered today and you received money in 93 months. Can you rethink this business model because it is a heavily cash consumed business?
You see, there is a period to deploy meters. All meters are not to be deployed on the zero date, sir. What the system is that you have to deploy it in 27 months and the first lot of 5% must be achieved at the first 6 months. Thereafter, 5% every. That is the model, sir. So from 7th month itself, you have PM start. Not everything happens after 27 months. So you have a progressive completion, progressive revenue accretion. There is some disturbance in the system, man. Yeah. Can you hear me now, sir?
Yes.
Yeah, some disturbance was coming in the system. Yeah. So in smart meter also, there is a revenue accretion from 7th to 27th month also. All is not happening after close of the scheme. That is a beauty part of it, number one. And number two, you see, if we like in between, we can always discount or securitize our bills with REC PFC under the very scheme. And they are very eager to build up their books if we like, post revenue accretion. What I have said is that the capex we want to do out of our books, but once a meter or a lot of meter is ready for OPEX, we can always monetize it. Partially also, progressively also, and completely also as a SPV. So all those choices are on our table.
So going forward, we bid 2 million smart meters for annual.
No, sir, monthly. We have a DDF facility. There is a DDF facility. They call it direct debit facility in the program, sir. That is an agreement with the banker itself. of the utility. Banker is a party to it. He is supposed to debit the utility account which has to be collected month on month from the consumers. So he has to debit my payout first as an obligation. So the mechanism is healthy, and we hope that there is no abuse to it.
Okay. And sir, last question, how much CapEx, so much CapEx you are planning, so why you give such a handsome dividend? You must keep the money for long growth of the company.
Sir, we have been always rewarding our investors and still keeping a fiscal discipline. We are totally a debt-free company. We ourselves have a cash of 1,500 CR. So paying a dividend, I think my investor deserves a dividend payout of at least as a dividend payout policy of the company, which is 25% of the bottom line. So we are honoring the dividend policy of the company.
That is good, but one side you pay dividend and other side you raise money from QIP. It is good.
It is good for the investor, sir. QIP gives you the value accretion to the stock, and dividend gives you the cash. I think every investor looks for that, sir.
Thank you, Abhishek. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participants. I repeat, please limit your questions to 2 per participants. Thank you. The next question is from the line of Dhiral from Phillip Capital. Please go ahead.
Good afternoon, sir. Thanks for the opportunity and congratulations for the great set of numbers. So you talked about 5,000 crore the capex for next 2 years. So if you can bifurcate where this amount will be utilized for which segment?
Sir, at the moment you can take it about 25% into data center and 25% into your TBCB, another 50% into smart metering.
Okay. And sir, any timeline by which you want to raise the QIP?
Yeah,
we can able to utilize it
by September, sir.
Sorry, sir?
We'll complete it by September of this year.
Okay, okay. And so you, in the initial comment, in the initial commentary, you mentioned that we have also L1 in the Punjab smart meter, and the cost of that smart meter is almost 35 to 37,000. So any reason why such a high amount for that project particularly?
Sir, that is the type of metering required in the feeders. Feeder metering is very different than consumer metering, sir. There are multiple applications of the meters, whether it is a DT meter, it is a three-phase meter, single-phase meter, feeder meter. So all meters are not priced equally, sir. They are of different purposes.
Okay, understood, sir. Thank you so much, sir.
Thank you. The next question is from the line of Chinmay Kabra from MK Global Financial Services. Please go ahead.
Yeah, hi, sir. Am I audible?
Yeah, you are very audible, sir.
Congratulations on a good set of numbers. Sir, I just wanted I had a request if you could just repeat the guidance that you had initially given for FY25 and 26.
24, 25, our top line will be 2,500 and 35 rupees, sir. That was the guidance we gave. And for 26, 25, 26, 3,500 plus as a top line and a EPS of no less than 50 rupees.
And if I'm not wrong, the guidance for margins is what is the guidance for margins, sir? If you could just...
We continue to maintain at 13%, sir.
All right. Yeah, those are my questions. Thank you.
Thank you. The next question is from the line of Shreyash Gathani from SG Securities. Please go ahead.
Good afternoon, sir. My question was actually on the data center side. So we've invested 300 crores of the 1,200 crores that we intend to. So just wanted to know I know that the capex is going to be back-ended mainly, but trying to understand what is the status of the project since we've seen delays. Has there been any redesigning or anything as such? And my next question was on the partner that you're looking at. What is the status on that? Because since the last 6 to 9 months, we've been guiding that, we are working with a few partners for the project.
Yeah, sure. Basically, the total project is 1,200 when all 40 megawatt or 24 megawatt of IT is completed. At the moment, we are doing phase 1 only of 6 megawatt. The capex for 6 megawatt is almost about 450 CR, out of which we have spent 300 CR plus. This will be now in a last leg of the work going on, or more on electromechanical side and instrumentation side, which should be completed by September end. Yes, there has been a bit of a delay because of the delay in civil works, largely because last time there was a weather and cyclonic impact in Chennai, and the labor was almost missing for 2 months, and a lot of water logging happened in the city, not to our project. So all that have impacted a bit, but of course, redesigning also is an ongoing exercise as our new directors are guiding us, who are more hands-on than our consultants deployed initially. So all put together, I will say that it has been worth the time spent on the asset. Still, we are able to make it ready within 2 years from the date of taking up the project.
Got it. That is very helpful to know. So the first phase, you're looking at operating by ourselves, or is that going to be with a partner as we had initially envisaged?
We are open to both, sir. Otherwise, we are ready to do ourselves. Absolutely.
Okay. So we have any clients in the pipeline as of yet, or we are going to start looking going forward?
No, we are in this market. People approach us, we talk to them, we adapt them, and it's an ongoing exercise.
Got it. So just last question. So when should we expect the 24 megawatt to be operational?
You can take it March 26, sir.
March 26?
Yeah.
Oh, okay. So that's a year and almost 2 years from now.
About 18 months from the date of first phase.
Okay. Got it. All right. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participants. I repeat, please limit your questions to 2 per participants. Thank you. The next question is from the line of Chintan Doshi from Wealth Plus Financial Solutions. Please go ahead.
Yeah. Hello, sir. So thank you for congratulations for a very good set of a number. Sir, I have a question from the data center part that you just mentioned that you just received a land from the Kolkata data center to be set up. So do we have any timelines for this particular project to get started for the Kolkata? Because you just mentioned this on the call today first time.
Yeah, definitely. It is already in design phase now, let me say. And first set of designs should be available to us by no later than October, I can say. And we should be starting construction of this project by January 25.
Okay. Second question, sir, that I just want to understand the thing about, so normally in the 1 megawatt, if I can understand the costing of 1 megawatt data center is roughly going at 45 CR, right? So how we are planning to monetize it? I mean, are we really looking to sell the data center after we build it out, or are we looking to lease out the capacity. So have you planned on the model of monetization of the data centers, or are we looking to, like as you said, like